If you blinked this week, you missed something absolutely historic in both crypto and precious metals.
I'm not kidding. We just saw the single worst silver crash in 46 years. A drop this brutal, we haven't seen anything like it since 1980.
And Bitcoin, it absolutely vaporized. $47,000 gone, just like that, from its all-time high.
But here's the craziest part, right? The very institutions, the analysts that saw this whole thing coming, are now turning bullish. What is going on? That's the mystery we're going to unpack right now.
Look, if you hold Bitcoin or gold or silver, this was your nightmare week. There's no other way to put it. You watched your portfolio bleed out day after day, and I bet you were asking yourself, do I sell everything? Do I buy more? What do I do?
All right, let's break down this historic market massacre. We're going to cover exactly what happened, why it happened, and most importantly, what you should be watching right now. Okay, first up, Bitcoin's brutal breakdown. I mean, this move felt like a trapdoor just opened up right under the market. The world's biggest crypto lost over 30% of its value in what felt like an instant. And the scale of this collapse, it was just staggering. Think about this. We went from an all-time high of over $126,000 just back in October to a gut-wrenching low around 79 grand this week. It completely wiped out months and months of gains in just a few days.
And you gotta understand, this wasn't just regular selling. Oh no. This was a massacre of leverage. We're talking over $745 million in long positions. That's bets the price would go up, getting forcibly liquidated. These weren't people choosing to sell. Their brokers just pulled the plug, automatically selling their positions because they couldn't cover the losses anymore. It was a brutal, cascading domino effect.
And this tells you everything you need to know about the mood. The Crypto Fear and Greed Index just plummeted to a score of 16. That, my friends, is extreme fear. We haven't seen a number that low since the big crash last year. You could feel the panic in the air. So what's next? The absolutely crucial level everyone is watching now is $78,000. That is the line in the sand. If we lose that, well, the charts have pointed to $75,800 as the next stop on this painful ride down.
Okay, so while Bitcoin was bleeding out, something else was happening. Something truly historic over in the precious metals market. And I'm not talking about a simple sell-off. This was an epic collapse. I mean, just look at how fast this wipeout happened. One day, silver is hitting record highs, everyone's celebrating. The very next day, a hawkish Fed chair nomination gets announced, and then boom. The day after that, the market is in an absolute freefall. A complete 180-degree turn in less than 48 hours.
No, listen to this. You have to hear this number. Silver dropped a staggering 36% in a single day. A move this big hasn't happened since the Hunt brothers tried to corner the silver market way back in 1980. This was literally a once-in-a-generation event we just lived through.
So you're probably asking, how on earth did it happen so fast? Well, it was a classic domino effect. First, the exchange jacked up the margin requirements, basically the cash you need to trade. That triggered a massive wave of margin calls and forced selling from anyone who couldn't cough up the extra cash. And that created what's called a liquidity vacuum. Suddenly, everyone was trying to sell, and nobody was buying. The price had nowhere to go but down, and it just collapsed.
One analyst summed up the carnage perfectly. He called it, and I quote, one of the most violent capital destructions in the history of commodities. And you know what? That's not an exaggeration. It was a complete and utter bloodbath. Okay, so the billion-dollar question is, what caused this? What caused this simultaneous disaster in crypto and in metals? I mean, these are supposed to be different assets, right? Why did they all crash at the exact same time? It really was a perfect storm. The main trigger seems to be the nomination of Kevin Warsh as the next Fed chair. Now the market sees him as a hawk, which signals higher interest rates and a much stronger dollar. And a strong dollar is basically kryptonite for assets priced in dollars like Bitcoin and gold. Then you throw in a looming government shutdown, rising tensions with Iran, and the fact that the spot Bitcoin ETFs kept seeing money pull out, and, well, you've got the perfect recipe for a market-wide panic attack.
All right, but hold on. Here's where the story takes a really interesting twist. Just as regular investors are hitting peak panic mode, the big institutions, they're starting to sing a very different, surprisingly bullish tune.
You're not going to believe this. After this absolute massacre of a week, who comes out with a new price target?
JP Morgan. And they're saying they see Bitcoin hitting about $170,000 within the next 6 to 12 months. That is more than double where we are right now.
And it's not just them. Standard Chartered basically said, "We think crypto winters are a thing of the past. We continue to expect new all-time highs." Their thinking is that this whole sell-off is just temporary, and that the steady buying from ETFs is going to create a solid floor under the market.
So why? Why are they so bullish while everyone else is running for the hills? It's simple, really. History shows us, time and time again, that moments of extreme panic, like that 16 on the Fear and Greed Index, they almost always mark market bottoms, not tops. It's the point of maximum pain, which, counterintuitively, is often the point of maximum opportunity.
Okay, so with all that said, what should you be watching next week? Let's get right into the key levels and the catalysts that are going to decide the next big move. All right, here are the battleground zones you need to have on your chart. For Bitcoin, holding that $78,000 level is everything. To get back in the game, it absolutely has to reclaim that $86,000 to $90,000 range. For gold, the must-hold level is $4,800, and for silver, that $80 to $85 zone, that's the new line in the sand.
And you've got to keep a close eye on these upcoming catalysts. The spot Bitcoin ETF flow data is huge for sentiment. Then there's the market's reaction to the Warsh nomination hearings and any news on that looming government shutdown. Any of these could spark massive volatility. The one bit of good news, technically speaking, we're deep in oversold territory, which usually signals that a bounce could be just around the corner. Look, this week was brutal, but these are the kinds of weeks that make millionaires. The people who had the guts to buy Bitcoin during the FTX crash back in 2022, they're now up more than 5 times their money. Is this another one of those moments? Nobody knows for sure, but here's what we do know. The institutions are still buying, the analysts are starting to flip bullish again, and sentiment is at rock bottom. Just remember, in the markets, when everyone is afraid, that's when fortunes are made.